Well, that was not the way markets wanted to end the week. Hey everyone, it's Saturday morning, March 28th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in, today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So, yesterday, US equities really took a hit. And honestly, it was a pretty broad-based sell-off. The big driver here, rising oil prices, which once again brought inflation concerns right back into focus. Now let's break it down. The Nasdaq Composite dropped about 2.1%, pushing it even deeper into correction territory as tech stocks came under heavy pressure. And you could really feel that across the board. This wasn't just one or two names, this was a full-on tech sell-off. At the same time, the Dow Jones Industrial Average fell around 1.7%, officially entering correction territory as well. That means it's now more than 10% below its all-time high. And the Standard & Poor's 500? That also declined roughly 1.7%, marking its longest losing streak since 2022. We're now looking at 5 consecutive weeks of losses. So yeah, momentum is clearly not on the bull's side right now. And here's a number that really stands out. The so-called Magnificent Seven, those mega-cap tech giants, wiped out more than $330 billion in market value in just one single day. So overall, what we're seeing is a mix of rising energy prices, renewed inflation fears, and pressure on high-growth tech. And that combination is not exactly market-friendly. Now the big question is, does this continue, or do we finally see some stabilization going into next week? Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.